You talked about the dwelling a little bit ago, the difference between the replacement value and the existing value of the home. I want to talk specifically about the massive increase in real estate costs that we saw happen after COVID-19. Yeah. And so how are some of these policies that maybe somebody hasn't looked at for 4 or 5 years, if they're not written with a replacement cost, what happens if, let's say, a home gets hit by a tornado, burns down, something like that?
So if you have a policy that is written for actual cash value and say it's 500,000 and your house burns down, and truly to put your house as it was is going to cost you now, because of COVID, supply and demand, inflation, is going to cost you 700,000, you will get 500,000 to build whatever you need. We will look, if you haven't looked at your policies for even just a year, I'll be honest, it's already gone up again because of COVID. You're at a disadvantage, and you will have to, instead of your deductible, maybe at 2,500 or 5,000, 10,000, you're going to have to pay for more for your house because the money's not there. But we do make sure our clients do replacement cost. And that means we will do a replacement cost estimator, taking in the fact that inflation, things that are in your house that are unique, materials, so forth. And of course, what's gone on in the last couple of years has played a factor in that also. So replacement cost, for example, if you're with a company like a high net worth company like Chubb, and your house is, the dwelling is $750,000, and it's going to cost, just because in the last year it's gone up, and it's going to cost $850,000. Chubb will, there are companies out there who will pay the $850,000 for your house to be covered.
What do you see most typically? What type of policy do you see most typically when somebody's coming to you and saying, "Hey, I want to make sure I'm covered properly"? Do you typically see replacement value, or do you typically see cash value?
I have been seeing replacement cost on there, typically, from most carriers. Now, is the dwelling correct? Probably not. It's a little low on a lot of the policies.
How would a person know that?
They wouldn't until they talk to their agent and have a replacement cost estimated out for them, instead of, because you can have a market value, your house is worth $1 million, but once you do the replacement cost, it could be 1.2 million with today's dollars. So people kind of get caught off, like my house is only worth $1 million. But in today's dollars, and also with the cost of goods now, with everything going on, it's gone up to replace that house.
And so when that happens, Sarah, do you then, does the insurance company then say, okay, the replacement value has increased, so now we need to increase your premium because the replacement value has increased? And do they do that automatically? Or is that something that you have to get with your agent once a year and say, hey, let's review this replacement cost? How does that work?
Typically with the high net worth carriers, it's automatically going to go up. They will do a replacement cost estimate on it each and every year. There are times that as an agent, I will look at it and review with the client. And if it's a little too high, we do work with the insurance carriers to see what we can do. But they typically, at renewal time, it will go up, and the premium does go up automatically. So, but yeah, most of them do that.
If a person were to look at their homeowner's declaration page and they wanted to know if they have replacement cost and if it's done properly, or if they've got an actual cash value, what would they look for?
On their policy for dwelling A, it would say replacement cost. And some of the policies will have an endorsement on their policy that says replacement cost at 125%. So they'll have the replacement cost that stays the same on dwelling A, say for example 500,000, but then it will go up additional 25% for that home because they bought the endorsement.
Okay.
Starting your route to retirement.